you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. I have a special friend and genius, Luke, with Market Mania, to talk to us today about what's going on in Canada as far as real estate, as far as mortgages, NAGAMs, adjustable rate mortgages, and overall just get a general idea of what's happening in Canada, how that can spread over to the US, how we're intertwined as two nations. Luke, how are you, brother?
I'm good, man. How are you doing?
I'm good. I want to tell the viewers as well, I'm actually using Luke's streaming service right now. I'm at a hotel behind me. So first of all, Luke, thank you for doing this collab with me, man. Luke knows how much I've been stressing because I've been on the road for so long. Well, and I can't get to editing. So I appreciate you, brother. Thank you for helping me with this. Luke, can you start by telling the viewers, and maybe some of the viewers don't know exactly what's going on in Canada. Can you talk about just the overall picture of Canada, maybe touching on what's going on with home prices, migration, and the biggest thing that I really want to eventually get to is the type of toxic subprime, if you will, financing or the type of loans that are going on in Canada and how that could really explode and create a similar situation to what the U.S. went through in the GFC.
Yeah, so in Canada, we have just some insane price declines. I mean, we have had some markets just go down at such a rapid pace, it makes the GFC look like a small blip. Some places went down like 30, 40% within a year. So we've had massive price declines in Canada. We had a massive bubble though. So home prices in Canada got way out of hand, like talking insane amounts of money to buy a home. So places like Toronto, Vancouver, for a single family home, you were talking nearly $2 million, which is just absolutely ridiculous when you consider the average income in those areas is like $80,000. So it's just ridiculous. We've had basically people get just insanely leveraged. There's been dodgy loans, but that really all started during the pandemic in 2020 and 2021. But before that, we've had just people leveraging on leveraging. So basically the government has encouraged it. We have the CMHC, which is like your FHA loans. So the CMHC is like our government-backed loans. And that has created a load of moral hazard in the banking and encouraged the banks to just do these ridiculous things.
And are you guys still seeing, so in some areas, some areas in Canada, already a 30% haircut. What impacts are you seeing that have on the lending institutions in Canada? Because obviously that creates potentially an incredible financial destruction, domino effect, if you will, like we saw in the GFC when people can't pay their mortgages. What effect have you seen that? Maybe you haven't seen too much, but what impact is that decline having on the corporate banks and regional banks?
Yeah, so the big banks in Canada, we really have 5 big banks, and they do most of the mortgage lending in Canada. And essentially, we have seen them get hit. Now, the main part where they're getting hit is actually in the stock market. Now, they've had to increase their loan loss provisions a lot. But what I always talk about, we hear the government, we hear the mainstream media that constantly peddles the banking system is rock solid. And it kind of reminds me of the banking system prior to the GFC, where they were saying subprime is contained, you've got nothing to worry about here, everything's fine. Well, the banks, they have trillions of dollars of loans in some cases, and they're increasing their loan loss provisions, and they've got, a couple of billion. So they haven't even got like 1% of the loans covered. So the amount of distress that's out there is insane. I know a lot of people, I'm in a lucky position where through my channel, I get a lot of insights from people on the inside of these lending institutions, and they tell me what's going on. I have a guy who works in customer service, and he says like 90% of the calls that they're getting right now are consumers in distress. I can't pay my auto loan. I can't pay my credit card bill. I can't pay my mortgage. But he said the mortgage is probably the least part right now. But you're already seeing, like you're seeing, Travis, in the US, the subprime is starting to uptick. You're seeing the more dodgy loans, the government-backed loans, the defaults are starting to rise quicker there, which you would expect, right? The weaker people, that's the best way I can put it. The weaker people, unfortunately, they're going to get hit first and then followed by the prime borrowers.
Yes, which is why guidelines are so important. So when you drop the rates to 2 and 3%, and now everyone can magically afford a house, but then everything snaps to reality, property taxes go up, homeowners insurance go up, it puts an incredible amount of burden and pressure on the homeowner. Because look, when this whole run-up happened, 2020, 2021, when rates were 2 and 3%, the psychology is, and I've been in mortgage for the whole time, generally, not all the time, but generally, even if it's not an FHA loan, the more risky loan, people are maxing out their debt to income ratio. So if people were maxing out their debt to income ratio in 2021 and 2020, 21, 2022, and now everything's flipping, property taxes shoot up, homeowners insurance shoots up. Now they're in credit card debt because they don't have the stimulus. I think it's very rocky. So, what in America, basically what happens is if someone's struggling, they call the servicer or the bank, whoever has the loan, and they request a loan modification. What happens in Canada when someone falls behind on their mortgage? Is it a quick foreclosure process, or is it a long drawn out process? How does that work?
So it varies province to province, Travis. So basically you have some provinces that essentially have this thing called power of sale process. I think they have it in some states in the US as well. So essentially it's sort of like a foreclosure, but it's much easier. So if you miss one payment, the bank essentially can come in and take your property. It's really easy for them to get a court order and get your property.
Wow. Okay. So are you seeing them, because generally they don't want to, well, and here at least the way it works, they don't want to foreclose. It's expensive. The average foreclosure takes 1,200 days. 1,200 days. Very expensive. Do you see the lenders there foreclosing?
Yeah, they have started to foreclose. So the power of sales are mainly in this one province, which is Ontario, and that's where the majority of the population of Canada actually is, in that province. But a lot of the provinces, like the province I'm in, it's all foreclosure. So that takes a lot longer. So from what I've heard from different people and different people in the law, I mean, there was a law firm locally to where I am that said they have never seen this many people pending foreclosure, even during 2008. And Canada didn't really get hit in 2008. They have never seen this amount of foreclosures going through the legal system. And I've also heard that the banks are still trying to get the foreclosures through from 2020 and 2021, people who weren't paying their mortgage back then. And we had like forbearance like you guys did. It was called mortgage deferrals. But these guys, I mean, if you think about it, it kind of makes sense, because you say 1,200 days, that makes perfect sense, because that all expired last year, right? So they're only just going into foreclosure like now. Even it's probably going to be mid next year before we see a massive increase in foreclosures.
So in the States or in Canada?
In Canada.
So it's already increased more than what people have ever seen, you said, right? And you suspect that it will get even worse before it gets better. Is that what you're saying?
Yes.
Can you talk? Can you talk, Luke, about how a potential foreclosure crisis in Canada can affect maybe even the sentiment, the mindset, policies, money printing of America? So, what would if anything, maybe it would do nothing, but how would a foreclosure crisis in Canada impact the U.S.?
Well, the banking system is just so interconnected between America and Canada that there's always going to be some knock-on effects. I mean, a lot of the lending institutions in Canada, they actually borrow in dollars. So they're using US banks to get loans from. So there's a lot of interbank lending that goes on within the banking system. So if one of these banks starts having issues, then all the banks are going to start having issues. And you see the exact same issues when it comes to commercial real estate as well as we're seeing in Canada. So I don't just think this is going to be a one-pronged thing. And we're also seeing like the Chinese real estate market that's going down. And there's a lot of banks from the US and Canada that were involved in lending for the real estate in China. And, you know, that all started back in 2021, as we know. But literally, we haven't seen much of a story about what's happened and whether anybody's taken any losses. But from what I've heard, what happened in China and the sort of derivative products that were created for the Chinese real estate market are very similar to the derivatives that we saw blow up the financial system in 2008.
Yeah, I mean, they have whole cities that are vacant. It's really, I feel bad for the consumers. I heard that a lot of the consumers had to pay for that as if it was their house, and then they shut it all down, so they lost their money. What do you think, Luke? What happens next?
Yeah, well, I think we've had like this denial phase essentially. I mean, I'm not like a smart guy or anything like that, and I can't forecast the future. And I literally just look at that pattern that you see happen during a financial bubble, and I'm trying to figure out always where we are in that pattern. And I think over this year we've seen really that denial. Oh, it's going to be a soft landing, everything's going to be fine. You know, the spring housing market hit and it was all like real estate prices are going back to the moon, it's all over. And now they've started crashing again in Canada. They've just resumed this trajectory that they were on before, and inventory has absolutely exploded going into the winter. This is completely not typical for Canada because we have bad winters, so people don't list their homes in November, December, and we're seeing massive amounts of people listing their homes. So there's definitely a lot of people in trouble, and they're trying to offload it now. And I think at some point we're going to tip into that fear in 2024 where it really gets gnarly, man.
Yeah. And, and if we go back to the GFC in the US, you see a rebound in prices. Mm-hmm. If you go back, you look at Case-Shiller, you can look at different data sources, but you see a bit of a bounce back. And then after that bounce back, bloodbath. Can you explain the type of financing in Canada? I noticed you said 80% LTV. Does that mean that Canadians have to put 20% down to purchase a house?
No. So basically, you can do as much as 0% down. So essentially, you can do a 0 down loan. They don't call it 0 down; they call it a borrowed down payment because essentially you can do a 5% down. That's like the official minimum, let's say. But there are certain loan insurers that will allow you to do a borrowed down payment, and they say that we'll only do it for prime borrowers because, I mean, we've seen this from the GFC. Prime borrowers were responsible for more foreclosures than subprime. So, just targeting prime borrowers, it doesn't mean anything. But yeah, the type of financing, so generally people put like 5 to 20% down on the house. What we saw in 2020 and 2021 were people doing cash out refis, people withdrawing from their home equity to put more than 20% down so they didn't have to get loan insurance, because if you put less than 20% down in Canada, you have to get the government loan insurance, and it's not cheap. I think it's like 6% if you're putting 5% down. So it's a lot of money. So people tried to avoid that, and because interest rates were so low, they were just like, well, let's just leverage, and they were buying second, third, fourth properties. You said about taxi drivers buying 6 homes. I covered an article in January where an Uber driver bought a house in Vancouver for $1.5 million with a private lender because he said he could rent out the basement. Like, what?
Oh, that makes a lot of sense.
Yeah.
I mean, but what you're saying, dude, what you're saying is why it ended up being a dead cat bounce. And that's why I was going in 2008. We had the small rebound in 2006. It went straight down. I mean, not straight down, but it crashed because of the weak consumer. And when consumers they're not putting money down, they're taking high risk loans. Now half the people are upside down in equity. it sounds like Canada it has a similar crisis going on, a mortgage crisis going on, potential foreclosure crisis going on. I mean, to me, with what you're saying, it has many similar signs as what happened in the U.S. in the GFC. I mean, when you have zero down payment, do you guys do stated income or no?
What's stated income?
So, Luke, back in the day, this is crazy. Back in the day, you could just, this is my income, and you didn't have to prove it. So I could say, hey, my income's $500,000. And the bank would be like, okay, cool, done, next, right? So, yeah, man, and not only stated income was horrible, I remember there was loan products back when I was a loan officer in 2002 to 2008 specifically. There was loan products where people can get 100% financing, stated income with a 580 credit score. So, I will say, fast forward to today, through the Dodd-Frank Wall Street Reform and Consumer Protection Act, thank God, man, we have qualified mortgage protection, right? So qualified mortgage means that if a lender lends money to a consumer to buy a house and it fits this qualified mortgage protection, that lender is protected from a lawsuit from the consumer, because the consumer has a right to sue the lender and say, hey, you should never have given me that loan because I could never have afforded that house. So it is strong. It is stronger income verification. But again, when we look at the more high-risk loans here, which the highest risk loan I would say is an FHA loan, specifically because of the income threshold, meaning you can go to 56.99% debt to income ratio, meaning more than half of your income, right, can go towards debt. More than half of your gross income. So your take-home income, it's even more than half. And that's why we see FHA mortgages. I think that the delinquency rate is, I know it's above pre-pandemic. I think it's at 2010 levels. I have to double check, but FHA delinquencies is spiraling out of control. We have a similar situation brewing, potential foreclosure crisis brewing, especially if values go down in FHA. But what I just read is, and let me know your thoughts on this, they're trying to come out and they're making revisions on this to where if you have an FHA loan, you can go into forbearance for 3 years without a foreclosure. What do you think about that, Luke?
That is just absolutely ridiculous, and it just sounds like a silent bailout. And I mean, if people aren't paying their mortgage either, then that just allows inflation to be higher. It's just essentially stimulus. I mean, it's not direct transfer payments, but essentially it is stimulative, because what you're doing is you're saying, hey, don't pay your mortgage. And that was why we had the inflation in 2008, right? I mean, not in 2008, in 2020, in 2021.
Right. Well, no one had. Yeah, you can go into an automatic forbearance, and then the Fed was printing money to the consumers direct, which we look and we can clearly see now that no inflation is going to be transitory if you're putting the money in the hands of the consumers specifically. So, brother, I see these protections and I recognize them. This is the bullish perspective that in the U.S. we can't, unlike Canada, right? We have these more regulated loans, minus FHA though. And my thing is job loss, man. If someone loses their job, it doesn't matter if they have a conventional FHA. It doesn't matter these things. It doesn't matter what the rate is. If you ain't got no money, you ain't got no money to make no payment. So, and if that contagion spirals, I just really hope people understand that yes, this is our perspective. We don't want to get trapped in echo chambers. We're acting like we know everything, but there's still a lot of dust in the air. And from what I've seen and experienced with my eyes and hands and witnessed, it's very, very, very fragile. And not only is the housing market, economy, the consumer fragile, how the world is weaved together now and how much banks and businesses are profitable because of the value of home collateral. If the housing market goes, full blown goes, I don't think we escape it. I think it's possible we hit a depression. I think it's possible, even if with money printing, the consumer is so fried, the job market is so toast, unemployment, right? If the power of unemployment and how that spreads, most young adults, Luke, they don't understand it. They can't understand it because they've not been through it. They don't know most of these guys, they're used to a job market where they're being begged. You don't even need a resume. You just need to smile not even the whole, you need to smile half the time. These kids don't understand what it's like to fight for your job. They don't understand how hard it was for us. My resume was 5 pages thick. I had a cover sheet on my resume. It was in linen. My resume full of references. They don't, so if that happens, man, I think I hate to say it. I don't want people to get hurt. I don't think it's everyone's fault. I think people are gullible, unfortunately. They want to trust the officials. That's the first mistake. Bro, I don't think people understand like how hard it is to get a job during a recession. I don't think people get that. I was an extremely skilled professional. I was really good at talking to people. I showed empathy and love. And, when I lost everything and I went to go work and find a job, because I didn't want to do loan mods anymore and stuff. And I was just at my wit's end, Luke, and I had given up hope and confidence in myself. I went to Walmart, straight up. It's like, fine, I'll just work at Walmart for a little bit. And I couldn't get a job, even at Walmart. And I had this remarkable skills. And brother, that's what I'm saying. Like, I get people are saying, yeah, the economy is great because of Taylor Swift concerts and a record-breaking Black Friday. But when we analyze the data, it's the debt. The debt is spiraling. And also what's spiraling is the delinquencies. The delinquencies, again, in all consumer debt fields minus conventional mortgages is above now pre-pandemic. But what's also fascinating and something we need to pay attention to because of the environment of quantitative tightening that we're in is the trajectory of those delinquencies. The trajectory of the delinquencies is telling us the shape of the consumer. Luke, what do you think people, in Canada specifically, because in Canada, unlike the US, they can make a decision to get a toxic loan. In the US, we've taken the decision per se out of the consumer hands to get a toxic loan, not counting FHA, because at least FHA still is strict income regulation. You still have a 3.5% down payment, but the debt to income ratio threshold is out of whack. What are your thoughts on the Canadians deciding on those loans? I mean, is a 30-year fixed an option?
No, so we don't have 30-year fixed rate loans. And the thing is, there is like a income verification in Canada, but the problem is fraud has become rampant, just as fraud was rampant during the financial crisis. And I think the problem is as well, you've got a lot of bad actors in the real estate industry. So a lot of realtors and mortgage brokers, they're also actually helping with that fraud because they are literally incentivized to help these people get the home. So what they'll do is if the person's like, I don't even think I can afford this. Well, you know what we can do? We can modify your T4s, which is essentially what the bank requires, and that's your tax returns.
Oh my
We
gosh.
can modify that. We can modify, because it can all be done. I mean, you can look up YouTube videos on how to do it. So fraud has just become rampant, man, in this market.
Yeah, we call it amending your tax return. And that is fraud. If you're a loan officer and you tell a consumer this is how much you need to make and you can just amend your taxes, it's fraud. And if not for the consumer. And you know what they do, Luke? I've heard of situations to where someone amends their tax returns, like especially if they're self-employed, like they'll remove deductions so it looks like they're making more gross income to qualify for a house. But after they close and after the lender verifies the 4506Ts from the IRS, blah, 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 they'll go back and re-amend it. So they don't have to pay a tax liability. So it's just like, I'm like, guys, like, there's no statute, as far as I know, there's no statute of limitations on fraud. You commit fraud, they come after you your entire life. Is it really worth it? And the consumers are just not thinking. And the same thing happened in 08, same level of fraud. But Luke, can you tell us what is different now in Canada versus 2008? Because I don't think you guys had a problem like the US did, like a problem like you're having now in 2008. Is that correct?
Yeah, no. So that is correct. We don't have like a 2008 problem in terms of the liar loans and all those type of things. I mean, essentially, when you get a loan in Canada, you are asked to prove your income. The problem that we've had is people have just got leveraged so much, and way more than even the US in 2008. So a lot of people, like, their down payment was borrowed money, like they were borrowing it from a home equity line of credit, even a personal line of credit. So people were just leveraging, like if you had an investment property in 2020, 2021, you were guaranteed cash out, refi that thing, buy another investment property using the refinance cash out of the other one as a down payment. And people have just got so leveraged now that, and a lot of these variable rate mortgages as well, these fixed payment variable rate mortgages, a lot of people took out these. We don't yet know the financial incentives for the mortgage brokers and why they were pushing these mortgages so much. But I think one of the components was home prices got so damn expensive in Canada that the difference between 2% and 1% was the difference of affordability for some people. But they didn't realize that that 1% was a massively risky loan, like you said, the risky loans in 2008. So I think there's a lot of differences, but there's also a lot of similarities. And when you really look back to the psychology of how the market reacts to different things, it's almost identical. And the government's response as well has almost been identical, where they've just been saying, it's okay. The regulators have just been saying, just like in the global financial crisis and the lead up to it, these negative amortization loans, they're okay. You know, just hold more loan loss provisions. And like I told you, they're holding like 1%. It's completely absurd, the amount that they're holding. So I think it's kind of crazy that we're following essentially the same playbook. And I think we'll probably see, you know, loan modifications. I think that'll be the next thing. You know, you can modify out of one of these loans if you can prove a hardship of some sort. But I don't think that's going to help, because I think once the job losses start, it's like you say, and in the US, I hear this all the time that, oh, everybody's got these 2-3% loans. They're never going to sell their home. That is BS, because think about it. Everybody overextended in 2021. That is the thing that people don't talk about. Everybody was overextended. They wanted a second house. They wanted to get the biggest house because everybody was working from home. And it's like everybody's just washed their hands of that and now just moving on. Oh yeah, nobody's going to sell. And like you say, Travis, property taxes, maintenance, HOAs, all these different things have gone up, and they're correlated to real inflation, not those phony numbers that the Fed and the Bank of Canada pay attention to. The real numbers, the real inflation rate, that's what they're attached to.
Yeah, we're seeing. I mean, the homeowners are feeling the pain. So, look, maybe you don't know, but what's the solution here?
Yeah, I wish there was a solution. I think when you get to this point, Travis, you have to let it burn. You have to let the free market forces work. And unfortunately, and I hate to say it more than anybody else, because what people don't understand, because I'm pretty brutal on my channel, is I really care about people. And I really struggle with that. And that's part of the reason why I came and made my channel, even though it might not seem and it might feel like I'm saying hard truths and giving the red pill. The reality is I really do care, and that's why I started the whole channel. So it pains me to see people in distress, people losing their home. But the reality is I know that the government cannot fix this mess. The central planners cannot fix this mess. If they come in and try and fix it, they'll only make it worse, exactly like 2020 and 2021. So it is a sad reality that the solution is really let the thing burn, let the demise happen, and then we can recover from that after finally, and hopefully people learn their lessons on the way down.
I mean, you know, and I have empathy as well, for especially for these young adults. I mean, I've seen boom bust. boom bust is healthy. Boom bust is good. Boom bust is what we need. That's how we get back to normal. But it's kind of hard for young adults to understand the boom bust health when the government is saying that there's nothing to worry about. There's nothing. These are young adults, Luke. Like they don't understand. They don't understand the hardships. They don't understand the what we're talking about, the fundamentals, the PE, the this and that. We got a government over here saying everything's good. Rates are going to be cut. Rates are going to be cut. Just buy. Home values are only going to go up. I mean, I think people have to do, a good job at filtering. I think people should be listening to all perspective, to people that have different perspective of us. And I think people really need to be careful who they're listening to, because I think a lot of people should start seeing more clearly now that there is very evident financial bias. And I'm talking about YouTube, obviously in the media, but specifically YouTube. And I think what people have to understand is like this bias, people are saying these things because either they're sponsored by a company to do so, like there's, like that's what we see all these economists say these crazy things, they're sponsored, they're paid by someone to say that. And then also another thing that is rampant is people are saying things to generate leads, to get people to buy houses, especially realtors. And they're doing it by scaring people, doom and gloom, but not the doom and gloom that they're thinking. The doom and gloom is the fear of missing out. That's the real scare for America. To me, the concern should be, saving money right now. It should be the future, should be unemployment. But they're scared that if they don't buy a house right now, Luke, they will never have an opportunity again. And that is just sideways. What are your thoughts on all that?
Yeah, I mean, I think that it's ludicrous to think that you'll never own. And the thing is, in Canada, we've had this absolutely blown out of proportion as well. But the thing is, people have been waiting a long time. I mean, for people in the US, there was an opportunity for some people after the global financial crisis. In Canada, there wasn't really an opportunity for people to buy back then. The prices were still unaffordable at that point. And because Canada's economy rebounded a lot faster, it wasn't really hit by the GFC, but they used that as an excuse to then start essentially what we have right now. It kind of meant that homes have always been unaffordable for the past decade. So there has been even more emotion, if you can imagine, in the Canadian housing market than in the United States housing market, just because the bubble has just been pumped so large. So I think that people really need to just focus on saving money right now and just getting their financial position in a good place, making sure you have good credit. Don't leave your job and move around and move city unless you actually really need to do that. Because the reality is, if you move jobs right now, you're easier to fire, and that's not a good thing. If you move cities, the risk of you defaulting on loans, the risk of you running into issues, again, is higher. So as much as people want to move around and they want to do all these things, I would say right now you just need to sit and wait. And the thing is, Travis, we're being paid to wait. Like we're being paid 5.5%.
Yes.
And I'm pretty happy with that, actually. I'm pretty pleased with that. I'm not a greedy person, and I'll take that. Compared to what we've had in the past, I will take that.
Great point. That is such a good, I don't know why I've never said that. That's genius, man. Yeah, so because we get bullied like, oh, you're getting your landlord rich, you're renting, you're stupid. Like, dude, I got to use my down payment, and I'm making $400 a month. You're right.
Exactly.
We're getting paid to wait. Look, just one last thing.
Mm-hmm.
Okay, can you tell us? Okay, so in the U.S. in 2008, 2009, we had the foreclosure crisis. Prices went down for houses, but that didn't happen in Canada. Why?
Yeah, so basically in Canada, it really was due to the fact that our banks just weren't very involved with all the fraudulent MBS and all the derivative products that were out there back then. But our banking system has just got more interconnected since then. So the banks weren't really exposed. There was still a crisis of sorts, though, because the government did have to come in with a bailout and bail out the banks. And actually, when you look at it, it was comparable size bailout to the one in the US if you go by GDP. So there was a bailout in Canada. But if you look at the recovery, it was much faster. And a lot of that reason for that recovery was that we had an economy that was more dependent on manufacturing and natural resources. And back then, oil prices were high and commodity prices were high. And another part of the reason why Canada didn't suffer during the GFC was China. China was going through an economic boom and the demand for commodities was going through the roof. So Canada was able to sell commodities to China, and that essentially just helped the economy. So the unemployment spike that we saw, it was pretty short-lived, and it was more reactionary, businesses just reacting to what happened in the US. And then basically, by 2009, prices were at all-time highs again, which is just insane to imagine. I mean, it's unbelievable. But essentially, we don't have those tailwinds right now. We have the opposite, Travis. We have China going down right now, and we have an economy which is less reliant on natural resources and commodities, more reliant on housing. In fact, we are 3 times more reliant on housing as a percentage of fixed capital formation in Canada compared to the US at the peak of the bubble.
Wow.
3
Flips.
times.
Total 360. So it sounds like what you're saying is primary results, in your perspective, was you didn't have those high-risk loans like we did in 2008, but also, and this may be the most important thing, the consumer could still afford their payments, and there wasn't this default crisis like we had, during the Great Financial Crisis. Is that correct to say?
Yeah, that's correct.
And then from then on, that foundation, if you will, has been chiseled at. Call it corporate greed, chiseled at, and now the Canadian banking system is putting themselves potentially in a similar situation to the banks in the U.S. during the Great Financial Crisis in that high-risk loans, neg-am loans, 0% down. How did that system come so far off that path, which was once soundingly a great financial system in Canada? You had to make money. What happened? How did that deteriorate?
Yeah, that is a great question, Travis. And really, it was lower and lower interest rates. We just saw lower and lower interest rates. So it allowed the system to get more and more leveraged, essentially, because as rates went down, people thought, they're never going up again, which is just completely ridiculous, because when you look at interest rates over a 30, 40-year period, they don't just stay low. That is just absurd to think that. So a lot of people leverage themselves based off that. Obviously, people thought interest rates were going to remain low for a long time. You had the Bank of Canada, the Fed, all saying that. But I don't even blame them. A lot of people put the blame on the Fed and the Bank of Canada, and they say, well, they were saying that interest rates were going to be low for a long time. I'm sorry, but you have to take financial responsibility for the decisions you make. You can't go around blaming central banks. They didn't sign your mortgage. And the fact is, if you don't take financial responsibility for your decisions, you're bound to make that same mistake in the future again, because you will always blame somebody else for it. You have to take responsibility. As a trader, when I make bad trades, which I make all the time, I have to take responsibility and say, that one's on me. I don't beat myself up over it, but I say, no, that was my loss, my bad. I saw it wrong, but I'm going to go make so many trades and essentially earn that money back. And, people who have essentially said, oh, the blame game has just been going on for so long now, Travis. And I think it's just become a thing in our society because of politics.
Yeah. I mean, it's okay. I got a lot to say there. 100%. It's 100%. It's the consumer's decision. And that's why we're saying this is our perspective. This is our data. It's your decision. It's the consumer's decision. That is number one. But I also think consumers are basing their decisions based on what professionals are saying that they trust. And I think that there is a little, at least some blame, and I don't want to play the blame game because it is the consumer's decision. But if the consumer is making the decisions based on information that is false and deceitful, I think there's a little bit of mercy, a little bit. But nevertheless, Luke, they're still stuck with the mortgage in the house.
Mm-hmm.
I'm just saying, man, as a professional in 22 years in real estate, I can't help but say that the real estate industry has been a complete failure as far as protecting the consumer from themselves, Like, as a professional, I know consumers are emotional and sensitive, and I see people take advantage of that. And we failed, and we know that. There's lawsuits, the commission lawsuits, the buyer's remorse. Overall, and there's some great realtors, but overall, it has been an absolute failure from the real estate industry, from the professionals, from the realtors. The consumers trusted the realtors, and then I asked, well, how much blame is on the realtors when the bad information is coming from the top down? If you're a realtor and you just got started and you're being trained by people that are training you to let's just close, let's just cheerlead, it's just the whole situation is bad. And I think it just always goes back, like you said in the very beginning, look, it's just we have to try as content creators, and I think we have a similar goal. We have to try to help consumers get smarter. Whether they agree with everything we say or not, we need to help them get smaller. And that's why I go back to that home buying course. I'm walking out what I'm saying. I put a lot of time and attention into a home buyer course. There's people, and I saw on YouTube, they make hundreds of thousands of dollars in selling courses, and that's fine. Do your thing. But I'm saying the reason that I did that is to walk this out. In fact, Luke, I'm the one that's paying for the course. I pay monthly fees to have this course operational so that people that are consumers can come to access it. And that's how you don't fail consumers as professionals in our industry. We need more people doing that. And I understand, I'm in a special situation to where I can afford to do this, but that's the type of accountability in the industry that I would like to see going forward. And I think that is one of the solutions. And I think the biggest solution here is, I go back to the corporate greed, institutional investors, Luke. I mean, is it as ugly in Canada as it is in the US with institutional investors?
Yes, I would say so. I don't think it's as bad with like large corporations buying home because there's been actually no incentive. I mean, Travis, you'll laugh at this, but in Canada, things have got so bad that there's been no incentive for corporations to buy homes because even if they rent them out, they're not cash flow positive, even in these markets in Canada where people say it's affordable. So essentially, there hasn't been as much of an incentive because I know in the US, obviously there were markets that were you could cash flow in. And then when interest rates got dropped low, it just encouraged them to go speculate in the housing market because they were just desperate for yield. But because our bubble was so large, there was no place they could go and get yield. It's negative everywhere.
You know what? And that brings me to unemployment. All right. Sounds like Canada didn't have, and you said it, so the unemployment was short-lived. Look, I asked myself, because I want to stress test my opinions and my perspective. And I asked myself, well, can there really be no unemployment? Can there really be that? And the answer, in my opinion, is no. There absolutely is going to be unemployment as long as the Fed doesn't do anything else. If we just stay in this environment, the economy is not meant to have money sucked out. Things break permanently. The system has changed permanently. So do you see, so asking myself this, I think it's impossible not to have a spike in unemployment minus that money printing and that bailing out. Do you think there's a way, do you think it's possible, Luke, to avoid in Canada, to avoid an unemployment crisis?
Yeah, I mean, it's certainly possible to avoid an unemployment crisis. And I think we saw that in 2020 and 2021. And I think the ramifications of that have been a total disaster. And I think anybody who begs for that to happen is just a complete idiot, because the reality is the situation we have now is much worse than what we were facing in 2020. Now, 2020 was a unique circumstance in a way, because at the time we didn't know what this was. It could have been a really, really bad sickness that was going to rip through the economy. Now we know it wasn't so bad, whatever. But the thing is, obviously, now it's going to be more of a financial and economic crisis that happens. So I think it's going to be really hard to dig ourselves out of this one, because it wasn't a financial and economic crisis that we had in 2020. So even if they go to the same playbook, I think, that could probably stop unemployment happening, but we're going to see massive amounts of inflation again. And then are you really going to want to own a home if interest rates are going to go to 10% now to 11%? Because people would have said back when interest rates were zero, Travis, and you know this as well as I do, that interest rates at 5%, you are out of your mind. Even I thought that that was not possible. I thought, oh, maybe they'll get to 2 or 3%. I did not realize that they were going to start raising rates by 50, 75 basis points every time and go that quickly up. So, and we can see bailouts and rates still remain high. And I think that's a risk as well. I don't know if it will happen. We'll have to see. It depends really on inflation. But I think if inflation comes back up, you're going to see interest rates stay high, and you're going to see the Fed and the Bank of Canada trying to do quantitative easing and all these different things. And really, quantitative easing is psychological based. It doesn't really do much. It's when the government comes out with the fiscal. And this is what people have to pay attention to. In my opinion, too many people pay attention to the Bank of Canada. Too many people pay attention to the Fed. It's really more about the government now, because the Fed and the Bank of Canada, they're important to an extent, because if they're monetizing the debt that the government is issuing, then that has an effect. But what's the government doing with that money? If the government is handing it out to consumers directly, or saying, you don't have to pay your mortgage anymore, which is direct stimulus, because that person, their mortgage payment's gone, so now they can spend that money on something else, then essentially all hell's going to break loose. We're going to see inflation 2.0. And I think that will be the worst scenario out of all the scenarios, because as you know, Travis, people, especially the poor and middle class, they are so screwed right now by inflation, because that affects them. So imagine again.
And it could happen. And honestly, and that's why I this trip has been really good, because I've been really just testing my perspective and trying to understand that's a lot of this hinges on what Jerome Powell does next. He could be the hero or he could be the devil. We don't know. And I'm going to say, thank God so far, Luke, he has kept interest rates elevated, because those low interest rates did get us here. So imagine if we didn't have Jerome Powell and we had someone weaker and they flipped already, and then we had lower interest rates, inflation. So we have to understand, we don't know what's going to happen next, and the story is not being told. And for that reason alone, I think it's worth that caution. I think it's worth the pumping the brakes. And I say that because a house is a huge investment. It's the Canadian, maybe the American dream to own it. But people don't, Luke, people don't understand the mortgage aspect, the liability part, the thing that no one wants to talk about. The granite is nice in the kitchen, but how's that mortgage? How's that payment? You making enough money to afford it? Can you save money right now? People cannot, this is no question. This is no presumption. This is based on fact. The ability for consumers to save right now is near GFC levels. I think it's slightly over 3% of income being saved. This tells us that the ability to save is not there, which means the unaffordability is wreaking havoc. I think what I got wrong, and I got to be careful making projections, what I don't understand is, first of all, I didn't think, Luke, that the Federal Reserve was going to come in overnight and bail out the banks. and inject and we see it on the balance sheets, the $400 billion. I didn't think that was going to happen. And the fact that that happened, and they said it wasn't a bailout, and they did it over a weekend. Bank run on Friday, Luke. Bank run on Friday. Decision to discount window on Monday.
Mm-hmm.
In the great financial crisis, they let these banks fail. They let them fail. And it took, I don't know, I think it took, I heard 3 or 30 months after the failure, 30 months for a package to be created to bail these banks out. So 30 months, 48 hours. That scares me. And so I think it's just scary to know how much power a handful of people have, when really the power is in our hands as the population. So, can we end, Luke? We've been here a minute, and I really appreciate your time, brother, and thank you for letting me use your service here. I don't want to end with uncertainty. I don't want to end in an unhealthy fear. I think certain fear is healthy because it's caution. What can the consumer on the sideline that's frustrated, what can they hold on to right now, Luke? Where's the hope? What message of hope, if any? Maybe we're all screwed, you think, maybe. I want to hear your message of hope to consumers.
I think that people, like I said, they need to save money during these times. They need to have a plan. I mean, just having a basic plan of what you have to do to pay your bills if one of you loses your jobs is a great idea right now. Because the thing is, like, if you don't lose your job, that is great. But I have plans. I have plans if everything goes down the tubes, what I have to do, where I need to go. And that helps me sleep at night. And I think people should do that, because having no plan, that's the worst idea, because then you're fearful and you're scrambling when things do get gnarly. So if you can save money, try and cut your expenses as much as you can. Don't be spending lots of money if you don't have it. And really, I think that's my message of hope right now. A lot of people aren't going to get hit by this. If you think about it, even if an unemployment rate goes up to 20%, still 80% of people are employed. So a lot of people aren't going to get hit by this. But there is a chance. So have that plan in place that if things go bad for you, you know exactly what to do. And like I said, keep your expenses low if you can and save as much as you can.
I love it. Well, I definitely appreciate your time, Luke. You guys don't forget to show Luke some love. Go to his YouTube channel, Market Mania, especially if you want to know what's going on in the Canadian housing market. But Luke also reports, and he's been ahead of me on this, actually, Airbnb. He's ahead of me on the STRs. Luke goes to these conventions. It's so funny. He's like a wolf. It's like the opposite of a wolf. He's like a sheep in wolf's clothing, right? He's like the sheep in the wolf's den. He's going to these, and he texts us all the time in our chat group. He's like, oh my God, these guys are idiots. This man, Luke, he's in it. He's in it. He's in it with the investors. He's understanding the money. Market Mania is his channel. Show this man some love. And if you're out there investing in real estate, I wish you luck. And we both hope you win.